We are so glad that you could make our time to join us on today's episode of Tax Matters. My name is Olumoyiwa Matuluko, and with me on today's episode is Christina Pius.
Hello, viewers.
Welcome once again to the month of November. How's your week going, and how is business going? Last episode on this program, we briefly touched on the story of the 2014 edition of the Interagency Retreat of the Monitoring Committee for Accelerated Revenue Generation and Enhancement for Petroleum Profit Tax and Royalty. It was held in Uyo, Akwa Ibom State. Because of time constraints, that story had to be pushed to today. We also recall that at the beginning of that episode, we did make reference to the free fall in the price of crude petroleum on the international market, which of course means lower earnings for all levels of government in Nigeria, and which is why the theme of the 2014 Interagency Retreat is very apt, talking about overcoming Nigeria's dwindling oil and gas revenue in the face of global challenges. At the beginning of this week, even as the free fall in the price of petroleum on the international market was yet to abate, news came that Nigeria's oil reserves had fallen to 31.81 billion barrels as at Wednesday, October 29. According to the PPMC, the Pipelines and Products Marketing Company, an arm of the NNPC, the reserve level is a gradual fall that began in 2008. This is against the wish of Nigeria, the plan of Nigeria, that its oil reserves peak at 40 billion barrels, while daily production will be 4 million barrels per day. So, what is the role of the Interagency Committee in ensuring that Nigeria continues to see better days?
The 2014 edition of the Interagency Retreat took place in Uyo, Akwa Ibom State from 13 to 17 October 2014. The one-week retreat was attended by a total of 79 participants drawn from the 5 government agencies that make up the committee. In separate addresses at the opening ceremony, sectorial heads gave reasons behind the setting up of the committee way back in 1999 and the rationale for the biennial retreat.
The main objective of the Interagency Committee is to monitor, accelerate, and enhance the revenue, generation of petroleum profit tax and royalty payable by the oil and gas companies. The committee meets monthly to brainstorm, strategize, exchange relevant information, and reconcile PPT and royalty figures.
There has been a sharp drop in the revenue accrued to the federal government in recent times, which are attributable to so many factors, including fall in crude oil prices in the international market, illegal oil bunkering, theft, etc. It is believed that this year's retreat shall rise with solutions that will not only improve the revenue generation through petroleum profit tax and royalty, but also suggest measures to sustain the economy towards realization of making Nigeria one of the top 20 economies in the world by year 2020.
The theme of this workshop, Overcoming Nigeria's Dwindling Oil and Gas Revenues in the Face of Global Challenges, is apt in many respects. Stakeholders are already aware of threats to increasing, if not relative decline, in revenue from oil and gas for the Federation account. No doubt there has been relative calm and stable production due, thankfully, to effective curtailment of militancy in the Niger Delta through the various initiatives of government and the growing contributions of deep water assets. Notwithstanding, the oil and gas industry is facing several challenges globally with regional and country peculiarities.
As agencies saddled with the responsibility of harnessing government revenues, it is only proper for us to meet in this way and synergize on the best way to improve our performance.
Technical papers were presented, leading to robust discussions. Tax Matters spoke to some of the participants on the sidelines of the 5-day retreat.
This forum, the interagency, they come together majorly to ensure that what is expected to be collected in terms of royalty and petroleum profit tax are collected as and when due. And the collaboration is such that we even share documents. For instance, the COMD gives us the lifting quantity, gives us the prices at which they are sold, and even gives us information about the revenues of these companies. And also DPR is there to issue licenses, and the DPR is equally there at the wellhead when the products are being taken. So you see that in collaboration, we are able to have information, we are able to have records when needed, and we are able to assess rightly and collect the tax. You know, the companies, they have no hiding place because they know that we will get whatever information from these other agencies of government.
Formerly, we are not sharing information. Today, we share information. Formerly, with like the whole oil industry is a black box. But today, we have opened up. This particular committee has achieved a lot. The first achievement that was so outstanding was in the drafting of the PIB. We all worked together. We were facing the same goal, concerted effort, and we achieved. In fact, the consultant then said this is the first country he will see government agency collaborating and working assiduously together.
So what specifically is the role of NNPC in this retreat?
The role of NNPC in this retreat is numerous. First of all, we want revenue, okay? And where is this revenue coming from? You have made investment in the oil industry. The revenue comes only from oil seeds, okay? And we are looking basically in the direction of the upstream in this particular retreat. Upstream means production from exploration to production, and you sell the proceeds from here. So our role is to ensure that every data necessary to generate this revenue is well kept. Therefore, we should be able to compare investment and revenue and see whether we are making any gain or not.
Of what importance, of what purpose is this retreat?
Yeah, these 4 agencies that are here, they are really in charge of government's revenue. We talk of DPR, that is in charge of royalty. We talk of Federal Inland Revenue Service, FRS, in charge of PPT, Petroleum Profit Tax. We talk of NNPC, is in charge of crude oil production and marketing. And then we talk of NAPINS, which is also a subsidiary of NNPC, that is in monitoring cost or supervising the investment of government agencies with IOCs. So there's need for all these agencies to come together in the face of doing lean revenue that is accruing to government from oil and gas industry. With the recent trend in the market, judging, in fact, within this week, we are witnessing collapsing of prices in the international market. On Wednesday, the price was $88 per barrel. Thursday, it shifted to $87 per barrel, and we're expecting a further downward trend. There must be a need for us, therefore, as government agencies that are responsible for generating more revenue for government, to come together and see how best we can do to address this ugly trend.
What is the role of the FIRS in doing this?
As tax administrators, we'll be looking at all the areas that we can block the loopholes in the tax laws, and try to be more thorough in our job to make sure that there are no tax leakages as much as possible, and also increase on our enforcement activities on airing companies.
Just like one of the presenters presented a paper from COMD, he talked on crude oil theft and the pipeline vandalism, and that's one of the major problems we are facing as a country right now in revenue optimization and realization. For me, if you must achieve this theme, we need to work especially on on our host communities, the government need to empower these people. There should be a sort of reorientation. Even for me, their chieftains also should be carried along, because I believe they have a role to play in enlightening their people, telling them the need to reduce or possibly stop such activities. And if they do this, it could help. It could go a long way.
We have come to the conclusion that DPR has a greater role to play in optimizing government revenue, notwithstanding the dwindling oil prices and general revenue. By pursuing aggressive revenue drive, ensuring that the oil companies, the IOC, they pay their royalty obligations as at when due. We are going to enforce all the rules and regulations guiding the payments. We are going to embark on reconciliation and monitoring of payments of the royalty, national oil revenue, gas penalty, and enforcement of rules.
At the end of the 5-day retreat, a communique was released.
At the end of the presentations and general discussions, the participants resolved as follows. 1. Improve cooperation among government agencies and work towards the same objectives. 2. Standardize reporting format. Work towards automation of collection processes. Enhance capacity building and improve information sharing among agencies to ensure transparency and accountability. 3. Effectively monitor payment cycle to avoid loss of trail. 4. Develop a clear and concise payment advice standard devoid of ambiguities. 5. NNPC to focus attention more on cost reduction in the cost of oil operations. 11. Improve collaboration and knowledge sharing among agencies through short-term staff secondment.
Every day, my people dey for work. Some dey do office work, some get them own business. So all of them want good road, constant power for better life. Oh, whether na office work, oh yeah, pay your tax. Whether na your own business, oh, pay your tax. If you want a better life, oh, pay your tax. Now your civic responsibility, pay your tax. Better soup, now money cook am. Oh yes. Nothing goes for nothing, my brother. If you want potable water, security and hospital for make life jolly.
That's right. Good roads, good hospitals, portable water, adequate security all come from taxpayers' money. Play your part in making Nigeria great. Everybody, small scale, big companies, entrepreneurs, do the right thing. Pay your tax. This message is from the Federal Inland Revenue Service, FIRS.
Thank you, Christina. It's our hope that all the lofty ideas that came out in the course of the retreat will all come together to keep Nigeria's head above water. We hope so too. We also know that we sat down with Mr. Abuja Milusi for an interview for greater insight into the workings of the oil and gas industry. That interview with Mr. Abuja Milusi will come to you, our viewers, very soon. In a related development, another workshop, this time a one-day workshop, took place in Lagos on the tax treatment of deductions for funds set aside for the commissioning, restoration, and abandonment of oil fields. Christina, it's your story once again.
The one-day workshop had in attendance stakeholders from the oil and gas industry, banking, tax consulting firms, and relevant regulatory agencies like Nostra and Nestra. In his opening address delivered on his behalf by Mr. Ezra Suberu, the acting executive chairman of the FIRS gave the background to the drafting of the regulations and the need for the workshop.
The level of degradations of the environment in the oil-producing areas require the concerted efforts of all stakeholders in the oil and gas industry to stem the tide. This has placed increasing demand on companies engaged in petroleum operations to clean up the environment after petroleum operations. The regulators in the oil and gas industry therefore seek to create a fund whereby approved annual deductions are made out of profit by companies engaged in petroleum operations and credited to the fund, accumulated until the end of petroleum operations when the site is to be cleaned up. The operators, however, expressed concerns about the tax authority accepting the approved annual deductions as allowable expenses for tax purposes. The FIRS was approached by the NMPC to find solution to the concerns of the operators by granting tax deductibility to the approved annual contributions to the fund. The FIRS, as a responsible government agency, has looked into the tax laws to find an acceptable way to address the concern of the operators. This has culminated into drafting of these regulations. These regulations, therefore, is a response and contribution of the Honorable Minister of Finance and the FIRS to encourage the companies engaged in petroleum operations to make adequate funds available for cleanup of oil sites after petroleum operations.
A representative of NOSDRA, Mr. Idris Musa, examined the matter at hand from an environmental point of view.
Oil spill incidents are some of the most challenging environmental consequences of exploration, production, and transportation. And this development has the potential to impact the environment and socio-economic livelihood of the people in some areas such as farmlands, aquatic life, as well as water quality. These reasons made it imperative to develop guidelines and standards for recovery of spilled oil, cleanup, remediation, and restoration of oil-impacted sites resulting from equipment failure, illegal oil refining, and bunkering. There are a number of ways for the decommissioning of any oil and gas installation, but whichever option adopted is dependent on a number of factors such as the type of construction, the size, distance, and location, weather condition, and the complexity of the removal operations, including the safety considerations for the workers, notwithstanding the particular choice of the commissioning option considered as appropriate.
Having laid the background, the draft regulations were presented to the participants for scrutiny.
With respect to the sections that were referred to, that's section 6.1 and section 10.1M, I think we should take a step further to ensure that issues like this are properly amended, because a simple line amendment to section 10 is going to address all the whole of this material. I'm not too sure whether the minister or the FIRS has power really to amend the law itself, but the minister will make regulations for the implementation of the law as enacted by the National Assembly. Now, if an item is not an allowable item, I think it's only the National Assembly that can say it is now allowable. Now, for us to avoid challenges going forward from legislative perspective, we need to totally block that area by taking a step further to make sure that section 10 is amended, probably by just inserting another alphabet there. So I think FIRS should take that step further to make sure that we are covered.
Is it going to be a pool of funds by all the companies or individual company? And secondly, who is going to oversee or perform oversight function on this fund?
I think we need to understand the overriding objective of this particular regulation. This regulation is not about setting up a fund. Okay, the objective is about under what situation can you claim a deduction for tax purpose. That is the objective of this regulation. The number two is that the regulation doesn't change the tax law. What the FIRS has done is trying to clarify the existing controversy as to what constitutes incurred. Okay, and I think when you go through the regulations, the sticking point is number one: should we claim a deduction because it is funded or not? And I think that is the fundamental issue here. Okay, it doesn't change anything. Should the ability to create a sinking fund be the only reason why I can claim a tax deduction. Okay? And I think the way I look at it is this. The OPTS has a valid concern if you create a sinking fund. Okay? Because what that does is that money is set aside for something that is going to happen in 5, 10, 15, 20 years, God knows when. Okay? You don't have access to that money. That is idle money. If you're a businessman, you don't want to do that. You want to be able to use your money for business.
Mr. Ajayi Bamidele, Coordinating Director of Fields Operations Group at the FRS, made these clarifications.
We are not the ones setting up the fund. Then the comment made by the legal luminary, we are not making any law. We are only explaining and trying to make it easier for a tax administration and how to administer it very well.
In an interview, Mr. Kingsley Okengu, host and director, tax policy at the FRS, also further clarified issues. What is this regulation about?
Okay, the regulation is trying to address the closure of, oil wells or sites that at the end of the day, right now, if you go to the Petroleum Profit Tax Act, there is not law that allows any company to make a deduction or set a money aside for the closure of these wells at the end of the day. But we discovered that it is causing a lot of environmental hazards. Most of these companies, they will operate and then they leave everything and go. And now the community that is involved, Nigerians will be suffering, and therefore we need to assist and now try to create this regulation so that the companies will be assisted. As they set money aside, we will allow it for tax purposes. If we don't allow them for tax purposes, it will be difficult.
And what is the role of the FRS concerning the funds?
FRS is not going to manage the fund. Now, it is the CBN that will ensure, as we said, the CBN will ensure that an account has been opened. And now, CBN is the regulatory authority for all these banks. And once that account is open, and that account should not be tampered with until the end of the life of that well, when the money will be used to do the closure. It is important to the FRS because these companies have been agitating that FRS have been disallowing such, provisions when they make it. Because FRS is supposed to disallow such provisions because the law did not, provide for setting aside such funds, and we'll be disallowing it and bringing it to tax. But at the end of the day, there will be problem, environmental problem, and therefore it is important because under Section 10, subsection 1M of the PPTA, the minister has the rights and authority to give a ruling or regulation as to such expenses, whether it should be done. So this is exactly what we just want to do, to ensure that we give a helping hand and ensure that what is necessary to be done in this system must be done, even if it is, assisting through the tax angle. So that's exactly what FR is all about.
Thank you once again, Christina. But we have to call it a day now, as we're already getting signals that it's time to move over for the next program. But I must say at this point that one is becoming very, very happy with the way the FRS is carrying on, ensuring that all stakeholders are carried along in all its dealings.
Commendable indeed. But in recent times, the FRS has shown us that as much as it can play, it can also bite.
You are talking about enforcement. Definitely. Tax defaulters, beware. The tax collector is on your street. Let's do this again next week. Same session, same day of the week, same time of the day. But ensure that you keep your nose dry so that the tax collector does not have a reason to visit you, except to come and drink coffee and tea with you. See you next week. From Christina.
Thank you for watching and bye for now. Remember to pay your tax.